Aaron, I'd love to start with you to just lay out for us what at, let's say, $39 a share for Twitter in the pre-market, the market is implying in terms of the probability of a deal, because that's the way this arbitrage works. You have to have a probability-weighted estimate of what the stock is worth based on various outcomes. What's your read?
Yeah, and actually, it's a good point. I think investors have been becoming a little more constructive on the situation at these levels, because if you bake in even conservative assumptions for the likelihood of closing at 54.20 or the likelihood of a price cut, let's say to $42, or the likelihood of a break, even using some conservative assumptions, you get to a weighted average somewhere in the low to mid 30s.
Okay, so weighted average of all those probabilities, low to mid 30s. That assumes
mid to high 30s.
Oh, mid to high 30s. Okay, so you're kind of there at this point. And you have to have, I guess, some assumption of in a deal break exactly where Twitter would trade down to, don't you?
Yeah, so I mean, if we want to, for illustrative purposes, think about this, sentiment seems to be $25 to $30 on a standalone value for Twitter, theoretical value if the deal were to break today. So let's say, again, being conservative for illustrative purposes, you put a 50% odds of the deal breaking to those levels, and then we say 25% chance of getting to 54.20, 25% chance of a price cut. You're going to get to about $38 on a weighted average there.
Got it. And Sarah, obviously, as was clear in the shareholder meeting yesterday, I mean, this management has to try to work toward this deal that is contractually required, as well as run the company and try to figure out exactly if they have to answer to these allegations that the bot problem is a bigger deal than they've let on, as Elon Musk says. I mean, how do you feel as if that's being navigated right now? And I guess also it seems as if the free speech line of attack from Elon Musk maybe has cooled off in the last couple of weeks.
Yeah, I think the Twitter board right now needs to focus on getting this deal done at $54 a share. I actually think that even at the mid to high 30 range, that's a huge premium for Twitter stock right now. Take a look at some of its competitors. Snap falling down to $14 just because the macroeconomics impacting the ad market right now are that bad, and there's no signs that they're going to get any better. But in terms of the bots, one challenge that Elon Musk has with that argument is he waived his rights to due diligence when he signed that contract for $44 billion. So I think it's going to be very hard for him to argue if it goes to court or if it goes to some sort of further negotiation that he should have known more. Now, he could argue that Twitter misled the SEC. I think that's going to also be another challenging argument. The thing that I think Elon Musk is going to try to do is just delay this deal. Now, that's where he has the leverage. Twitter's board wants to get this thing done as fast as it can, because to your point, still needs to lead and manage this company before close. And so I think that Elon Musk is going to do is he's going to try to push this further down the line. And then quickly, to address your comments on free speech, Elon Musk is super distracted right now. We see him tweeting about birth rates. He seems to have moved on from the free speech argument, in part because he probably sees it as a distraction towards getting this deal over the finish line. In that, he just needs to really focus on what the fair market value is of Twitter versus what he contractually is obligated to pay at that $54 share price. Yeah,
and, you know, I guess, Aaron, the way it works right now, I just wonder exactly whether arbitrageurs as a class are kind of all in on this deal. It's a cash deal, so you're not short the acquirer equity or anything like that. So it's basically kind of a bet on it happens or it doesn't happen. Is there really a precedent for negotiating down the price in this type of scenario without a material adverse change that you can trigger?
Well, I'd say the price that we're seeing in Twitter is one reflective of the risk that there could be some type of litigation. A lot of times investors want to wait for that potential litigation to hit. So we're in a little bit of a limbo right now until and unless that happens. But I would also say more broadly, we're in a bit of a period of de-risking for across deals. Now, I mean, across markets, of course, but also in the merger arbitrage space. And so that's probably having an impact on where Twitter is trading as well.
Yeah.
And that has nothing to do with this transaction.
Right. Just less risk capital out there.
Shepard Smith here. Thanks for watching CNBC on YouTube.